Now we are going to another segment that a lot of traders talking about. It's about trading sessions. I know that you're from US. For example, I live in Europe. I'm trading Euro session and US session. So what sessions do you trade?
Okay, so with my main strategy, it's really not session based, and this is a swing trading strategy. So it's meant to be able to only check it at the top of the hour. It's guerrilla trading. My mentor is Joshua Bunker, and he developed this. So really it's for people who work and people who can achieve that freedom to be able to travel the world like I was. And it's a 1 hour time frame, only one time frame, and you just check at the top of the hour. So that's no sessions right there. I like that the most because right now I'm doing an interview and it's New York session, so I don't have to really check that. But also there is another strategy called ICT, and I'm sure many of people know that. And I made a YouTube video on that. And that one, just because I'm in New York, right, or in the New York time zone, I trade the New York session, and I find that that's best. You could also trade London. I've never really dabbled on it just because it's like early in the morning for me. But I would say mainly New York session if I'm intraday trading, and then if I'm just doing my overall long-term swing strategy, it's 1 hour time frame. I wake up once in the middle of the night, check the chart, so it's no set time frame.
Okay, did you ever try to trade Asia session, for example?
When I very first started, I did, and I'm sure most people don't like Asia session. And ICT talks a lot about that, how it's just it's bad. It's not good. For me, it's not good. This is my strategy. It might work for some other people, but
yes. And when you trade in US trading session, do you open one trade per time or multiple trades?
So it depends, right? If I have my ICT setups, I will open one trade during that New York time session. And then if I have another setup on my swing trading one, just because it's a swing trade, I prioritize that one. But let's say I trade 3 pairs on like the ICT setups. If I have 3 pairs on each or 3 trades on each, I'll take them. But I only take one trade on that pair for the day. So if I trade one setup at 10:15, I can't trade even if there was another setup later. And that goes for every single pair. And once I hit one setup, I usually just even if I hit one setup and the New York sessions, I call it when it hits lunch hour at noon, I most likely will just call it a day at that point. But honestly, it's discretionary and it depends on how the market's moving. Because some days it could be good and I need to be involved. Other days it's just slow and choppy.
Yes. We know that euro dollar, British pound dollar correlated with gold and everything. Everything is correlated with US dollar. So you pick one currency pair for that day and you push that. Am I right?
Basically, I'll have my forecast for the week or have my forecast for the day. And then based on that, I'll get a good sense of what I don't need to pay attention to and the ones I do need to pay attention to. So yeah, pretty much.
Now, just to see on the chart, when you use the chart, in your videos and your YouTube, you talk about swing low, swing high, and you analyze the chart and everything. Do you prefer using 1 hour chart or 15-minute chart when you're making reversal trading decisions?
Reversal trading decisions. Honestly, I would say probably the 1 hour just because the levels of the swing highs and swing lows hold stronger liquidity behind them. So I trust that more than like a 15-minute reversal. That's just what I think. I might be like other people could have different results, but just based on my back testing alone, I found that a higher time frame holds more power.
Yes.
Meaning there's a reversal on that time frame and I take a trade on that time frame. I'm always going to prioritize that over a lower time frame.
Yes. Excellent. And now, if you have a swing low and swing high on the chart,
okay,
you see the wick, you trade rejection, support, or resistance, and where you will put the stop loss to avoid false breakout.
Okay, so let's say, based on the video I did, let's say there was like I trade liquidity sweeps with some fair value gaps and stuff like that, and this is for the 15-minute time frame. I'll explain the 1 hour after. So to avoid false breakouts on the 15-minute, I would put my stop a level below let's call it, I took it at the swing low. I'll put it about, it honestly depends on the pair, but just based on the price action, I'll have like an average level that I'll drop it below. But sometimes I do get hit in those false breakouts, but it's all part of the long run. So when I do my back testing, I gauge it based on like what's going on to the left of the market, if there's any other levels that it could sweep before that or after that. And then that gives me, it's kind of discretionary, but it gives me a sense of where to put it. And then on my 1 hour time frame, the 10 pip stop has been working for me beautifully, because what I see happens is sometimes there is that false breakout and then it comes back down and tries to stop you out. But when you're on a higher time frame, it doesn't come all the way back down. So it really will just hit like maybe the 3 to 4 pip drawdown and then go back up. So I've found that 5 pip stop loss on the 1 hour time frame does not work. Between 10 and 12 is key for me.
Yes, excellent point.